Good morning. Welcome to today's session. And our session today is going to focus on accounting for not for profit making organizations. Now, when we talk of not for profit making organizations, these are organizations established with objectives other than making profits. These organizations may include schools, labs, hospitals, NGOs, and the accounts that are normally kept by these organizations are different from those accounts which are prepared by those that make profits. And the difference lies in the following. One, whereas for profit-making organizations prepare a cash book, in non-profit, it is replaced by receipts and payments account. Then the profit and loss account. Whereas the profit-making organizations prepare a profit and loss account to show the performance of the organization. For non-profit, the profit and loss is normally replaced by income and expenditure account. Then also another difference lies in the capital. Capital is replaced by accumulated fund. That is for non-profit making organizations. Then for net profit, when it comes to non-profit making organizations, they don't have net profit because we say that they are there not to make profit. But if you find that the income is greater than the expenditure, then you will have excess income over expenditure. But if it is the other way around and you have you find that the expenditure is greater than the income, we shall not have net loss, but we shall have excess of expenditure over income. So what are the records kept by non-profit organizations? The records kept, one, we have the receipts and payments account, and this summarizes the cash and bank transactions for the period, and it includes the opening balance, the receipts for the period, the payments for the period, and then the closing balance. Then you have income and expenditure account. This is normally presented in the same way as the profit or loss account for a service organization. That is, the costs or expenditures are matched against incomes. However, you need to know that in this account, profit is termed as excess of income over expenditure. And of course, the reverse is true for loss. Then you have bad trading account. Now, some non-profit organizations, such as clubs, schools, operate bars where members go for refreshments or recreation. And this can generate a profit or loss in a given period, which necessitates the preparation of bar trading account to capture the trading results of the bar. Because you see, much as it is a non-profit, you cannot be there that you are relying on only donations and maybe income from subscriptions. You need to, you may find that yes, it is non-profit, but it has put in place an investment wing whereby it generates some income. Then the profit or loss from the bar should be posted the income and expenditure as an internal source of income. And this profit from the bar is not distributed to members, but is put back to finance the activities of the organization. And clubs maintain the accounts in single entry form. So as a result, some records are missing, and at that effect, you need to prepare control accounts to determine the bar purchases, sales, and also to adjust some expense accounts. We have already looked at the control accounts. Now, accumulated fund, I've said that the accumulated fund normally represents capital of a non-profit making organization, and this is normally calculated from the use of statement of affairs as the opening balance sheet or statement of financial position. Therefore, accumulated fund is equal to assets minus liabilities. Then we have the statement of financial position. This is not different from that of a profit-making organization, except for the renaming of capital and net profit or loss. Now, subscriptions, we say that the major income for some of these non-profit making organizations, of course, it is subscription. And subscriptions from members are a major source of income for a non-profit oriented organization. And these subscriptions could be ordinary or they could be life subscription. What is the accounting treatment relating to these subscriptions? Subscriptions due in areas, of course, are current assets. Subscriptions which are due or in areas, because that means that you've earned that income, but you've not yet received it. Then the subscriptions received in advance or prepaid, of course, are current liabilities. And subscription taken as income for a particular year should exclude subscriptions that are received in arrears and also those that are received in advance. And of course, this would necessitate you to open up a subscriptions account similar to this one which you see below here. Okay, you have the subscription brought forward, which are in arrears, those that are prepaid. You have income and expenditure account, the ones that you've received and of course organized in your income and expenditure account. Okay, you have receipts and payments account, and then you have your carried down both in arrears and also the one that is prepaid. There is an example here. They say that the free information is taken from the books of Mukono Rugby Club. You have subscription received during the year ending 31st December 2023, 1 million. Subscriptions due at the end of 31st December 2023, 100,000. Subscription received in advance for the following year commencing on 1st of January 30x4 amounted 300. Determine the amount of subscription to be taken as income for that particular year. So if you have your subscriptions account, you realize that the subscription received during the year ending 31st December was 1 million. So if it was received, then automatically it means that you're going to credit your subscriptions account, and of course the corresponding debit will be in the cash or bank. But then you have those which are due, which you have they are due, but you've not received them. That's 100,000. So meaning that you will have this one, you credit your subscriptions account, okay, with the 100. So then they are saying that those that were received in advance for the following year commencing 1st April amounted 300. So if it is for the following year, then that is your carried forward, which is 300. So meaning that by balancing off, actually this 1.1, so mean that by balancing off this account, what you recharge in income and expenditure for that particular year would be 800 what? Thousand. So that is what you recharge in the income and expenditure. Now that you're going to recognize this within the incomes. Now, we talked of life subscription. Because you say that subscriptions, you could have ordinary, but then you could also have life. So in some clubs, members are allowed to become life members by paying a life subscription. Meaning that if you pay the life subscription, then automatically you qualify to be a member of that club till death. Okay. So, and of course, those life subscription allow the members access to the club facilities for the rest of their life. So when a life subscription is paid, of course, the non-profit organization is not going to recognize all this as income received in that particular period. But of course, you are going to be recognizing a certain portion of that life subscription that has been paid in the financial statements. So meaning that if life subscription is paid, you need to debit receipts and payments account and then credit life subscription account. So that when the subscription is transferred to the income and expenditure, because that means that you are going to look at the money that has been paid. You're going to recognize income over a period of how many years? Because you must have a time frame. I say maybe if I am uh, 45, maybe you can make an estimate that if I've paid for life subscription, maybe I'm going to live for some other 35 years, so that whatever I've paid can be recognized over that period. So mean that every year I will be writing off a portion of that subscription received in advance, and I will be recognizing it in my income and expenditure. So when a subscription is transferred to income and expenditure, you are going to debit the life subscription and then you will credit income and expenditure account. So the credit balance on life subscription is a long-term liability to the club, because remember, you have received that income, but of course you've not yet earned it. Okay, that income is not yet earned because the service has not been provided to the client. So every year that passes by, that is, you recognize a portion of that income within the financial statements. Now, having looked at that, we have a comprehensive example, and I'm going to do an example and then you do the rest of the numbers. You have ABC, the treasurer of ABC Football Club prepared the following receipts and payments account for the year ended 31st December 2023. So you have receipts and payments. These are the receipts and these are the payments. So they're saying that the following information is available. We have bar stocks, bar debtors, bar wages in arrears, ordinary subscription received in advance, then you have bar creditors. So they're saying that the club had the following fixed assets, buildings, which were carried at a revalued amount of 20 million, equipment, which was recognized at, in other words, was carried at 6 million, that is at an NBV, net book value. Then repairs is an item of government expenditure and should be capitalized. So meaning that in this case, any cost in regard to repairs, we shall not charge it as an operating expense, but we shall capitalize it, meaning that we are going to depreciate this cost. Because if they say is a development expenditure, then that is a capital expenditure. So meaning that if it is capital expenditure, we are going to depreciate that cost incurred in regard to the capital expenditure. you must have looked at difference between revenue and capital expenditure, especially when you are looking at depreciation. Now they're saying that the club depreciates all its fixed assets by 10% on cost, with exception of equipment, which is depreciated by 5% on reducing barrels. Then they also say that half of electricity expenses relate to the bar. 10% of the subscription received is live subscription, which should be credited systematically to revenue account over a period of 10 years. So they are saying that you prepare the accumulated fund, you prepare the bar trading account, you also prepare the income and expenditure account, and also the balance sheet at the close of the financial year. So now, what are we going to do? I need to begin by preparing the accumulated fund. But before I prepare the accumulated fund, okay, they also require the bar trading, okay, they also require the income and expenditure. Now, if I may take you back on the accumulated fund, they are saying that I say that this accumulated fund normally represents the capital of a non-profit organization, and it is calculated from the use of the statement of affairs as the opening balance sheet. So meaning that for you to prepare the accumulated fund, you need to get your assets minus liabilities. So if I come here, my accumulated fund, we can put this on fresh page so that it fits there. My accumulated fund, I will have the assets. So I need to look at the assets. I need to look at the assets. So the assets that I have, one, I have buildings. So I have the non-current assets. And among these, I have buildings. So the cost, we can say here I have cost. I have cost. I have accumulated depreciation. Then I have net book value. So the cost of this building, is 20 million, because it is here within the cost of the building is 20 million. Actually, it is cost stroke valuation. Because the building was taken at cost rather than at valuation, because it was revalued another amount. So when I list the accumulated depreciation of the building, the accumulated depreciation in this case, is it given by looking at this scenario? It's not there. So meaning that I will take it at 20 million. That is the cost, the valuation amount. Then another asset, I have equipment. So this equipment is going to be recognized at its cost of 6M. Is it the cost or it is net book value? I check building, equipment, net book value. Okay. So meaning that the net book value here is going to be 6 because there is no accumulated depreciation. Then from there, I go and look at current assets. Current assets. Remember, I'm preparing my statement of affairs. So this is the statement of affairs. To prepare the accumulated fund, you need to prepare the statement of affairs. That is as at 1st of January 20x3. That is the statement of affairs. Then I have current assets. Current assets. And among the current assets, I have bar stock. And I'm taking the balances at the beginning of there, not at the end, because I want to determine my opening position at the beginning. So you have bar stock, and this bar stock is 250. Then I have bar debtors. Bar debtors, this is 400. Then I have bank. And of course, I will check this within the receipts and payments account. And the bank amount is 2.5 million. And I'm taking this opening balance, which you see here, 2.5, because I'm determining the position at the beginning of the period, so that I can be able to determine my accumulated fund. Then I have, I think those are the total current assets. Those are the only current assets. So mean that if you add your total current assets, it will be 3,150,000. In that case, your figure for total assets, will be, it will be 29,150,000. Then I go to the other section of equity and liabilities. Equity and liabilities. And within this equity and liabilities, I need to begin with accumulated fund. But this accumulated fund, I don't know. It's what I'm looking for. This figure, I do not know, but I am looking for this. For this figure, I don't know this. Okay. Of course, it will be my balancing figure once I get the liabilities. So I go, do I have any non-current? No, I don't have any non-current liabilities, but I have current liabilities. So current liabilities, I have bar creditors. The figure for bar creditors is 650. Then you have bar wages outstanding. Bar wages or in arrears. and they are just here. If I may take you back, I believe you've printed the question, because that's why I'm not scrolling up to check those figures. You are looking at your hard copy. So bar wages in arrears at the beginning, it is 140. So I need to check 140. That is bar wages in arrears. Then you have any other. Then you have also subscriptions. Subscriptions received, subscriptions in advance. So you say that this is also a liability, because that if somebody pays you in advance and you have not yet provided the service, then you cannot take it as income. Much as we say subscriptions are income, but the one which is paid in advance is a liability. So 120. So meaning that if I add this, my total current liabilities would be my total current liabilities would be 910. Okay, total current liabilities would be 910. So remember, if I add this to get my total equity and liabilities, total equity or total accumulated fund, total accumulated fund and liabilities, I should be able to get 29 million, which should be the same as that of assets. 29,150,000. That should be my total accumulated fund. So what does it imply? That the difference is my balancing figure. So if I get the missing figure here, I'm going to get this 29,150,000 minus 910. So my balancing figure in this case would be 28,240,000. That is my accumulated fund, which I was looking for. Okay, so you need to determine the accumulated fund by preparing the statement of affairs, and the statement of affairs basically is prepared by getting your total assets at the beginning of the period minus the liabilities, okay, at the beginning of the period. So that is my accumulated fund. Now, two, I go to the bar trading account. Now, I said that, remember, I said that much as these non-profit organizations, they are there not to make profits. But of course, you cannot rely only on subscriptions and also income from donations. You need to put in place investments where you can generate some income. Okay, so mean that if you, for example, you may have like maybe Rotary International or Rotary, those Rotary clubs. So much as they don't make profit, they are not, therefore not for profit. But you find that there are activities or investments which have been put in place to generate income, because you need income from your own sources to finance or facilitate your activities. You cannot rely on subscriptions. What if subscriptions do not come in time, or members do not pay, or you find that the donors have cut off their they are aid, and others they are no longer giving you money. So will you close business? You can rely on that income that you've generated from some of the investments which are put in place to generate somewhat revenue. Okay. Now, with bad trading, of course, I need to prepare the bar trading account. This is a normal trading account. You will have your bar sales. What did the bar sell? Then I raise cost of sales. Then I raise to get the gross profit. And if there are any operating expenses which relate to the bar, they must be charged, particularly in the bar trading what? Account. So if the expenses do not relate to the bar, then they will go to income and expenditure account. Okay. Now, for the bar trading, I will have my bar data. I need first to determine the bar data because you see, when you check here, they have given me information about the bar. You have bar stock, bar data, bar wages in arrears, bar creditors. But I don't have sales. Neither do I have purchases. Okay. So with this, I need to prepare control accounts. Okay. Before I even begin prepare my statement before the bar trading. So if I draw a ledger here for bar data's control account, bar data's control account. This is my bar data's control account. So I will have balance brought down. And this balance brought down for bar debtors is 400,000. Then I need to see, have I been given balance carried forward? For bar debtors, if you check here, for bar debtors, you have opening, closing 340. So that is balance carried forward. Balance carried forward. That is 340,000. Now, I need to check, is there any payment that was made by debtors? Yes. When you check in this receipts and payments account here, you see receipts from debtors. They paid 24 million. So if they paid and you debited your receipts and payments account, okay, then I'm going to credit my bar debtors account. So I'll come here, I say bank, these people paid to the bank 24 million. If I balance off my ledger account, by balance of my ledger account, you realize that this side is bigger than this side. So to get the balancing total of 24,340,000, okay, to get 24,340,000, my balancing figure represents the bar credit sales. And this figure is what? This figure for bar credit sales is So that we get 24,340 minus 400. That is 23,940,000. That is my figure for bar credit sales. Okay. So having determined for, I need also to know the purchases. Okay. Now for the bar purchases, I can also draw my account. For bar, this was data. Now if it is for purchases, it is for to be bar creditors control account. And of course, if it is for debtors, then the balancing figure will not appear on the debit, rather the opening balance will not appear on the debit side. Okay. But I will have my let's delete this. I will have my brought down for bar creditors is 650. Then for the closing balance carried forward is 240. Then you need to ask yourself, did the creditors pay? Were they paid rather? So if they were paid, then we shall debit their creditors, the creditors control account. And from what I see here, the creditors were paid 6 million. So come and debit my account with 6 million. And of course, the corresponding credit will be in the bank or cash. So meaning that if I balance off this, I can see the debit side is bigger than the credit side. So this is 6,240,000. In that case, to get 6,240,000, so the balancing figure here is represents bar credit purchases. Which is 590,000. Okay, so that is my figure for bar credit purchases, 5,590,000. Now, I also need to make adjustments for any accruals or prepayments if they are there anyway. Those are to relate to bar. Now, for example, I have bar wages in arrears, because if you have any area accruals and relate to the bar, you need to have, I'm saying, if you have any areas for payments in advance, you need to have the ledger accounts, the T accounts, so as you determine how much should be charged in the bar trading account. So now, like for this, I will have bar wages in areas, and if there are areas, of course, it's a current liability. So meaning that this opening balance will appear on the credit side, and the closing balance here will appear on the debit side. So I'll just come here. I have bar wages, bar wages. I have bar wages, so I can draw my control account, rather T account. So I come here. This is my control account. This is bar wages. Okay, so bar wages account. I have balance brought down. It will appear on the credit side. Why? Because it's a liability. If it was prepaid, it would appear on the debit side. Why? Because it is a current asset. So this is brought forward is 140. Then carried forward is 130. Okay. Now I need to check if they made any payment in regard to wages. So meaning that if you check in your profit and loss account, you realize that under payments you have a payment of bar wages, which is 1.7. So I'm going to debit my bar wages account, because you know that if expenses have reduced, you debit. So meaning that I will come here and say bank 1.7 million. So meaning that if you balance off this ledger account, you can see the debit side is bigger. So to get 1.7 million, get 1.7 million, get 1.7 million, 1.7 million. Here, my balance carried down, rather the one that I will charge in income and expenditure will be not income and expenditure, but the one that will be taken to the bar trading account would be 1,690,000. Okay. Now having put in place this, now I can prepare. Those are the simple working that you required. I can have my heading for which company is this. This is ABC Football Club. ABC Football Club. So you come here, you say ABC Football Club. ABC Football Club. Bar trading account. Bar trading account for the year ended. For the year ended 31st December 2023. Okay, and you'd have your bar sales, and the bar sales you had determined it as, if you got your control account, as 23,940, 23,940,000, 23,940,000. Then you less cost of sales, and you know cost of sales is composed of opening stock, and the opening stock is 250. Then you add purchases, and the purchases is 5,590,000, because you also go and check your control account so that you get your cost of goods available for sale. You'll have your cost of goods available for sale. The cost of goods available for sale in this case is 5,840,000. And it is on this that you less your closing stock, which is 160. Then your cost of sales, which will align with the sales figure. The cost of sales is 5,680,000. Once you less the gross profit in respect to the bar, your gross profit in this case is 18,260,000. Less operating expenses. And the operating expenses that you will less are those that relate to the bar, strictly to the bar. Any other expense which does not relate to the bar will be taken to the income and expenditure statement. So I have bar wages. So bar wages, the figure for bar wages is 1,690,000. Then I have electricity, because now when you check for electricity here, because what bar wages which I've charged is the one which I determine in the T account. So for electricity, if I go up and maybe for you to view, you've been given electricity, which is here in the receipts and payment account of 1.2. Okay, you can see it here, 1.2. But then they are saying that in the additional information, that half of the electricity expenses relate to the bar. So meaning that this 1.2, I'm going to divide it. The 600 will be charged in the bar trading account, and then the other 600 will be taken to the income and expenditure statement. This is 600. Electricity is 600. So when you add the expenses, I think that is those are the only expenses that I have in regard to the bar. So if you add the expenses, you are going to have 2,290,000. So meaning that my net profit, which will be taken to the bar, rather to the income and expenditure, is how much? Is 15,970,000. That is the income, rather the profit that you've generated from this bar, which is being run by ABC Football Club. And when I'm preparing my income and expenditure statement, this profit is going to be taken as an income, okay? That is within the, if it is a loss, of course, I would have charged it in the operating expenses. That is under income and expenditure. If it is a profit, it will appear under the incomes. Now, the next is to prepare income and expenditure statement. Now, if I have to prepare the income and expenditure statement, of course, you will have your heading, income and expenditure statement, income and expenditure statement, income and expenditure account for ABC Football Club for the year ended at the 1st December 2023. Now in this, I'll begin with my incomes. Incomes. And among the incomes, I have donations. Because now I'm looking at the income now. Donations. And the donations, I have 1.4 million. Then I have this bar net profit. Bar net profit. And bar net profit is 15 million. The one which had diamond up there, 15,970,000. Then I have net competition receipts, net competition receipts. Now this net competition receipts, if I see up, like scroll up within the incomes here, you see raffle receipts, competition receipts. Now, but much as you receive this income, there were some expenses incurred, like competition expenses. So the receipts of 1.6 are going to net of this competition expenses. The raffle receipts, I'm also going to net off the raffle expenses so that I get my net worth income. So if you find that the non-profit has undertaken an activity for a short period of time to generate income, then you are going to net off those expenses from the income that is generated. Okay. So competition receipts is the net competition receipts. I will have I will have 1.6 million. I subtract 800. I mean that the net received in respect to this activity is 8,950,000. Then I also have net raffle receipts. Net raffle receipts, and the net in regard to this is 1.23 minus 350, the expenses incurred in respect to this activity. So that gives me 880. Then another is ordinary subscription. Ordinary subscription. Now when you check in ordinary subscription here, ordinary subscription, okay, I need my T accounts to make an analysis of these subscriptions, and I see which one I'm going to charge in the income and expenditure as ordinary and also as life. If I put my ledger accounts for these subscriptions, let me draw my ledger accounts here for subscription. I have this is ledger account for subscription. This is ordinary subscription. Ordinary subscription. Then I have life. Life subscription. Life subscription. Now, when I check on ordinary subscription, I have subscription received in advance. So if it is in advance, I will have brought forward. Because if it is in advance, it's a liability, current liability. That's why it will appear on the credit side. Then I have carried forward, which is 170. Okay. Now, for life, they are saying that what is received, because when you check on this note number F, they're saying that 10% of the subscription received is life subscription, which should be credited systematically to revenue account over a period of 10 years. Now, if you look at the subscription which was received here, subscription which was received is 10 million. Okay, but they're saying that 10% of that relates to life. To mean that I will have my 10% of 10 million, that is 1 million. So that means that my bank, in the bank, under life subscription, you have received 1M. Okay? And they are saying that you should take this one. This supply subscription should be treated in a way that you are going to charge it over 10 years. So if I get 1 million divided by 10, it means that in the income and expenditure account, I'm going to charge 10% of 1M. Okay? 10% of 1M. And that gives me what? 100,000. That gives me 100,000. Then that means that what is carried forward in this case would be 900. And this is what they're going to treat as a long-term liability. Because this one, you are going to be removing 100 every year over 10 years. Because now it was 1, I've removed 100 for this particular year, which I've recognized in my income as expenditure. I've remained with 900. If, for example, I come in the second year, I will remove another 100, I remain with 800 till the 10 years are reached. So now, within this ordinary, when you check the one that was received now by bank, ordinary is 9 million. Because remember the total was 10, but out of the 10, they are saying 1 million was life. So meaning 9 is ordinary. So if you balance off this account, what you are going to charge in your income and expenditure, because this is bigger, the credit side is bigger. So to get 9 million, 120,000, to get 9 million, 120,000, what you will charge in your income and expenditure, you are going to charge 8,950,000. Okay? 8,950,000. So meaning that if I come here under my subscriptions, I have ordinary subscription. I'm going to take 8,950,000. Then I have life subscription. I'm taking 100,000. Okay. Then when you add your total income, in this case, total income is 28,100,000. So it is on this that you're going to less expenditure. And the expenditure, you have stationery. And stationery is given as 200,000. Then you have transport. Transport is given as 250. Then you have electricity. Now electricity, remember I've been given 1.2, but I'm going to raise the 600 which was charged in the bar. Whatever I'm going to charge for electricity here will be 600, because half of it was charged in the bar. all related to the bar. Then I will have depreciation, and I will begin with development expenditure. So they're using straight line, so it was going to be 2 million times 10%, and that is 200,000. Then I have equipment for depreciation for equipment. This is 6 million times 5%. This is 300. Then I want the next one is building. This is also because it's on straight line, 20 million times 10%. That is 2 million. So meaning that the total expenditure, in this case is 3,550,000. So that means my surplus, because I can see now the income is greater than the expenditure. My surplus income or excess of income over expenditure, or excess of income over expenditure is 24,550,000. This is what will go now to my statement of financial position. Okay, it's going to go in my statement of financial position under the area of equity and liabilities. So if I can quickly prepare my statement of financial position for ABC Football Club as at 31st December 2023. I'm going to have your non-current assets. I can take all these because let me just come and copy this one. So I would have my non-current assets, building, which is 20 million, but the depreciation now here, accumulated is 2 million. Okay, accumulated is 2 million. And the net book value will no longer be 20, but now it is going to be 18 million. Then for equipment is 6. I remove depreciation of 300,000, then 5.7 as my net book value. Then I have development expenditure. Organized at 2 million. There is accumulated depreciation of 200,000. Then my net book value is 1.8. Then so you can have your total non-current assets. Total non-current assets. So the total for non-current assets is $25,500,000. Then you got your current assets. Among the current assets, you have bar stock, bar debtors is 340. Then you have bank. And of course, with this figure, you get it from your receipts and payments account. So that closing balance in your receipts and payment account, which is 28 million, 8,230,000, which is here. Is here 28,230,000. That is the closing balance. Then I think those are the total current assets. You can even reduce so that they fit on one page. Then if I add my total non-current assets here, of course it would be 28,730,000. So meaning that if you add the two, your total assets would be 54,230,000. That is for total assets. Then I go to equity and liabilities. So equity and liabilities. And among this, you have the accumulated fund. Accumulated fund. And this accumulated fund, you go. This is what we prepared in the statement of affairs. It was 28 million. 240,000. The 8,240,000. Then you have you shall add surplus income over expenditure. So this surplus income over expenditure was 24,550,000. So you check your income and expenditure account. Then from there, you have non-current liabilities. Non-current liabilities. And it is on this that you will have your life subscription. Life subscription. Life subscription. And this life subscription, it was 900. Because remember, the 100,000, we charged it as income in that particular in this year. So 900 is what is going beyond 1 year. So we shall continue writing it off until all of it is utilized. Then we have current liabilities. And among current liabilities, you have bar creditors, and the figure is 240. Then you have bar wages in arrears. Figure for bar wages in arrears is 130. Then you have subscriptions in advance, and the figure for subscriptions in advance is 170. When you add you have your total of 540. That is for the total current liabilities. So mean that if you add getting your total, get your total equity and liabilities is 54,230,000. So that is it. Non-profit making organization. Okay. Now I want you to go and do the following illustration of Bonamaya. Okay. This other illustration of Bonamaya. So you prepare it, and also you do the illustration of bed golf club. You also prepare that financial statements for bed. Then what else? And any other number that you come across for non-profit making organization. So you do those numbers Once you do them, then everything should be fine. Maybe what I need to correct on this Bunamwaya question, life subscription is 20 million. This is okay. Donations 3.5. This is okay. Ordinary subscriptions 23. That is okay. Receipts from bar receivables 9 million. It is okay. Sales of entry tickets 7.5. That is okay. Opening balance of 8.5 is okay. Repair of pavilion is okay. Rent of training ground 3 million. That is fine. Allowances to players 4.5. That is fine. Printing of entry tickets 1.5. That is okay. Payment to payables 1.6. That is okay. Purchase of sports vehicle 20 million. That is okay. Purchase of there is purchase of sports vehicle 20 million. Okay. Then there is purchase of sports equipment. So in other words, you need to add the following. Under receipt, because you see when you remain like this, do not balance. Under payments, you also add purchase of sports equipment, which is 3.2. So you add that. Then bar wages 2.5. Okay. So this figure is going to change here. It is remain the same, but it will, this one is within this. Purchase of sports equipment is missing under payments, that is of 3.2. Then bar wages 2.5, that is fine. Administration expenses 4 million, that is okay. Other expenses 1.8, that is okay. Balance carried down 6 million. Okay, so you add purchase of sports equipment within the payment section. Then under additional information, here for clubs building, the cost is 40 million at the beginning, end of the year. This one you need also to change. This one is not there. The 150. The 150. So delete this 160. Delete the 160. Then buy inventory 1.5. Then here buy inventory at the beginning is 1.5. Then at the end it is 2.5. So meaning that here so this is so these two figures should go. So delete 160,000 for club buildings. For club buildings. club buildings. On 31st December 2015. 1st December 2015. So that one should be deleted. Then 2, by inventory at the end. By inventory on at the 1st December 2015 is 2.5 million. Inventory at the 1st December is 2.5, not 1.4. Not 1.4 million. So you delete this 160. In other words, there is nothing, no value at the, it is not there. Okay, here 1.4 allowances to players, payables, 1.4, 1.6, 800, 1 million, 400, then 7. The rest are okay. Okay, so you do this number as indicated here, and you also do the review question. And of course, when you face a challenge, then you can always get in touch with me. Okay, otherwise have blessed day and nice weekend.